Hello and welcome to my market update. Today I have with us Wendy Russell from Guaranteed Rate. We wanted to actually bring something new that I actually hadn't really heard of until just recently about mortgage recast. And you may be asking, what is mortgage recast? So because of that question, I'm going to ask Wendy, so what is mortgage recast?
Good question. It's not all that new, but a lot of people don't know about it. So mortgage recast is when a client wants to put a large principal pay down or a payment towards their principal. Rather than refinancing, the mortgage servicer will recast the loan. So whatever the principal payment is after the pay down, re-amortizing that payment for the remaining term of the loan. So it saves in refinancing.
So, in particular, I guess, what niche, it sounds like a little bit of a niche, obviously. What would be a typical scenario of who would benefit from something like this?
The borrowers, the clients, if you're in a purchase transaction where you're going to get large sums of money in the very near future, so rather than having to structure a loan with a first and second or just having to pay the larger payments over the life of the loan, when they make that large principal pay down, the loan is then recasted and the payment is recalculated based on the remaining principal balance. So it kind of basically it is an advantage to the client or the borrower.
Okay. So I know a lot of clients probably ask, well, recast, refi, what's the difference? Sounds very similar in some ways, but what's the difference between the two?
With recasting, you're not changing the note rate or the term of your contract. You're just refiguring the loan based on the outstanding principal, so you're not going to deal with all the refinancing cost. And a refinance, basically, you would redo the whole terms of the loan, the rate, the term, and the amortization. So
is there a cost differential between either doing a recast and versus a refinance then?
Yes, I mean the costs are very limited on a recast. It will depend on the company, but range probably, I would say, anywhere between $250 and $500. Whereas a refinance, you're absorbing all of those costs, right? $2,000 to $5,000 in closing costs, right? For refinance. So there is a big difference.
So I guess especially if somebody had, let's say, refinanced a year or so ago, they probably have obviously a better interest rate, so they could retain their current interest rate and lower their payment is what they would be able to do, if I'm correct, right?
Yes.
Okay.
Yes, correct. It's a good situation. A lot of people don't know about it. They would contact whomever they're making payments to now and request that their loan be recasted after the principal pay down. I would actually probably do it before they make the principal pay down so they know what their financial situation would be. Right.
And so there is it sounds like a little bit of a caveat. In other words, they have to bring enough of a substantial down payment, so to speak, to make it worth the servicer's time and energy, it sounds like.
Every lender has different guidelines with regards to recasting. Some of them allow it, some of them don't. So you do need to check with your lending institution to make sure they do allow it before you actually make the principal pay down. You want to make sure you're making the best decision.
Okay, great. So if they have more questions about loans, finances, recasting, refi, where can they reach you?
Myself, Wendy Russell at Guaranteed Rate Financial, 805-223-1411.
Great. And thanks again for joining us. If you have more questions about buying or selling, give me a call, 805-339-3516. Thanks.